Good afternoon, this is Chris from Tamebay and welcome to our webinar today on Brexit sterling. We're going to be taking a look today on what's happening in the world with sterling, what effect Brexit's going to have, and some tips on how you can mould your business to A, take advantage and B, mitigate any dangers. So thrilled to hand you across to Jeremy Cook from World First, who's going to be presenting today. Jeremy, welcome.
Good afternoon, Chris. Thank you very much for that kind introduction, and thank you to everyone who has taken some time out of a busy day and a busy time of the year as well to attend such a webinar. For those of you who don't know, who haven't heard about World First, we're an international payments company. Our HQ is down in London, but have offices all around the world, and we facilitate a lot of marketplace sellers, international payments for marketplace sellers, be they importing from abroad or obviously selling their wares internationally. So we got together with Tamebay to talk about what we thought were the risks around Brexit. Brexit is probably the biggest political change in the history of the United Kingdom since the Second World War, and obviously what that means for an industry which is so international looking. So we'll look at sterling, we'll look at the trade risks around Brexit, what it means for businesses trading internationally, and then obviously, as Chris said, some ways that hopefully you'll be able to mitigate things moving forward. Now, if you've got any questions, you should be able to fire them through at the end of the presentation. We've got more than enough time for a good bit of debate and honest chat at the end of the presentation. This graph here is a very, very simple graph which just shows just how badly sterling has done since the Brexit referendum in the mid part of last year. If those bars were on the left-hand side, that would be how much those currencies in the middle have lost against sterling since that vote. On the right, in green, means how much those currencies have gained against sterling. So, of these major currencies, which we would typically help international marketplace sellers with, euro, South African rand, Australian dollar, US dollar, you can see that for the large part it's been at current pricing. I think when I did finish off this presentation yesterday afternoon, about 12.5% that sterling has fallen against these major currencies since that Brexit referendum. Now, for the majority of you who are selling internationally, that is obviously a good thing. Things are 12.5% cheaper. For those of you who are a similar age to myself and maybe a little bit older, will remember the great Blue Cross sales that we used to see advertised on the TV. Everything was 15% off. Basically, the Brexit vote has been a Blue Cross in the box saying leave the European Union, but also a Blue Cross sale for every UK good sold outside of the UK. Everything is a little bit cheaper. To put that into a wider historical context, and this is, that graph is only telling a story of something like 17 months or so. This is sterling going back to the 1990s, and the lower this level is, the lower trade-weighted sterling. So sterling against every currency which we currently trade with or have a trading relationship with, be it the European Union and the Eurozone, which is obviously our largest customer, to Fiji or Paraguay, a very, very small part of the UK trade outlook. They weight that and they see how much buying power the pound has. We are very, very close to the lowest levels that we will have ever seen. Now, typically for those, for a lot of businesses here in the UK, they're importers, that's bad news. But certainly for the marketplace sellers and internet retailers, if you're selling abroad, then this is good news. Things are being priced a little bit cheaper. It may have an impact on your margins, and we'll come on to that later on in the presentation. But as it stands at the moment, there is a very, very little reason why British exports should not be running higher, and why businesses such as yourselves should not be seeing a benefit from these kind of moves. Obviously, this is more to do with Brexit than it is to do with anything else. There is a lot to deal around Brexit. There is a huge amount of road that is still left to travel. But everything that we're seeing at the moment is that is slowing. Now, that is a slowing of the UK economy, but not our prime export partners, i.e. the Eurozone, the United States, other places within Asia as well, but also a slowing down of the negotiations and everything as we get into Christmas. Typically, certainly in financial services, and I don't mind saying this, certainly in financial services, about a month from now, about the 16th of December, no real work gets done after that. Everyone is more than happy to take a couple of lunchtimes in the pub, but hopefully we're not seeing that in Westminster. For the Brexit negotiation, we've already had 25% of it, as you well know. We initiated or invoked Article 50 in March of this year. We have to leave by March 2019, March the 29th to be exact, 11 p.m. March the 29th, 2019, which happens actually also to be my 35th birthday. So you can guarantee that regardless of what happens, I'm going to be pretty drunk when that happens. So if we are 25% of the way through, you'd expect to see at least 25%, hopefully, of progress. But unfortunately, the news, the political meetings, regardless of whether you're a Remainer or a Brexiteer, the negotiations are not going quick enough. You would have to say. The October meeting did not yield what they call sufficient progress, and that means that we can't start talking about trade. You'll see from the slides as we go through this that Brexit will live and die via international trade and investment. So either businesses such as yourselves investing in the United Kingdom and also trading abroad, also trying to make sure that everything that we make, do, sell here in the UK is replicated elsewhere. That is the golden ticket, but obviously it depends on the trading relationships that we then sort out with our largest customers. The government, this is a quote from David Davis, is only 50-50 confident, 50-50, let's say there's only 50-50 chance of some movement by the December meeting, which takes place on December the 14th. Contacts of mine in Brussels and in Dublin and in Frankfurt do believe that we will see something on trade by the end of the year, and that we will start to talk about trade in the early part of next year. Should we not, then markets will look at that very, very dimly. Sterling will continue to fall. The pound will become very, very volatile, because regardless of whether you are a very small business or a very, very large business, you at the beginning of 2018, you're going to be planning for also 2019. And so without those kind of plans as to where we sit within the greater scheme of international trade, then when push comes to shove, unfortunately, people will expect growth to slow and the UK economy to falter as a result. So December the 14th, December the 15th meeting is a real crunch time pre-Christmas. We've seen a lot of position papers from the government, but they haven't really added too much. There's still a lot of sticking points. A friend of mine is on a plane at the moment. David Davis is a couple of rows ahead of him. He's off to Berlin as we speak. We think that they are going to be talking about Ireland, about divorce payments, about the rights of each other's citizens, which all three of those have yet to be decided, but need to be decided according to the EU before we start talking about trade. We also need to talk about customs, and I'll come on to that later. For those of you who on the call who run a business, you will have heard this statement more times than I care to reiterate it, but as per every negotiation, Nothing is agreed until everything is agreed, be it a business contract, the sale of a house, anything to do with international trade or anything to do with striking an agreement with someone. It all looks like nothing's going to happen, and then everything happens. I always use an example of a basketball game, which is, if you like basketball, then great. I don't particularly like basketball because it's an hour of back and forth, and everyone's scoring 2 points, and then 3 points, then 3 points, then 2 points. And with 2 minutes to go, it all goes a little bit frantic, and then 2 minutes is over and someone's won. This will be very, very similar. The Brexit negotiations will be very, very similar. Back and forth, briefing against briefing, front page against front page. Probably, maybe even the UK walking away from the table at one point. But then with a couple of months to go, or maybe even only a couple of weeks to go, it will all become very, very frantic, and a deal will be done. We're not at that stage yet. We're in that back and forth period at the moment, which unfortunately for businesses obviously means a little bit more uncertainty.
Sorry, a question, Jeremy. You say it'll be very frantic until the end, and then a deal will be done. How confident would you say you are that we will get a deal, as opposed to walking away with what people call a hard Brexit and just walking away without any agreement?
I personally think, and our central scenario here at World First is that we will see a transitional deal. Is that we will see a deal saying by March 2019 we will see a deal that says we agree on this, we agree on the rights of EU citizens, for example, a divorce payment of 60 billion euros, let's say, no hard border between Northern Ireland and Ireland, but we are still working out the finer points of other points of Brexit. For example, what happens to regulations, what happens to trade, and therefore we can't leave yet. We can't leave on March the 29th, so we want 2 more years, or 3 more years, or 5 more years. Now, a transitional deal will take it has to be voted on here in Parliament in Westminster. It also has to be voted on by every single member state of the European Union as well. So that will take a while. That'll take probably 6 weeks or so. So if you work backwards on the basis that March the 29th when we have to leave, then we're probably going to get hopefully something around a transitional deal this year. But the very, very last time it could probably happen would be this time next year. So I think that we extend, because 2 years was when it was set up. When Article 50 was set up, 2 years was set up as such a short amount of time that no one could possibly do anything within it. So I think we'll see. I think we will leave. I don't think we'll see a second referendum, but we won't leave until maybe 2021, maybe 2023. And
would you say a transitional deal would be a stabilising effect on sterling, or will it be more uncertainty?
A transitional deal at the moment, as it stands at the moment, would be seen as a positive, because the transitional deal would likely keep us with access to the customs union, membership of the single market. While that will still mean paying money to the European Union, it keeps the trade channels open. It keeps everything ticking along as per usual. A lot of the fears around the UK economy going into the vote, and why George Osborne said, we're going to have a recession, and some people were talking about, the end of the world, was the belief that Article 50 would be invoked very, very quickly after the referendum, and we'd start to see these trading relationships kind of break down. So any continuation of that, any continuation of what is current, everything what is as it is at the moment, will be seen as a positive.
Fantastic. Thanks for that.
No worries, no worries. So one thing I wanted to look at is we can talk about trade in inverted commas, and who do we trade with, and what is trade? These are how many are there? Probably 15, 20 countries, the top 15, 20 countries that the UK currently trades with. In total trade, so anything from anything from food to cars to services to USB cables, whatever it may be. This is our this is our trade. One thing that I wanted to highlight with this, as much as it's nice to show off a pretty graph, is the amount of the companies who we currently, the countries who we currently have a free trade agreement with, as a result of either being members of the European Union or just being or the EU will have a trade relationship with. So obviously Germany is a member of the European Union. There's nothing with the United States. There is nothing with China at the moment, but the Netherlands, with France, with Belgium, with Switzerland as part of the free trade arrangement there, Ireland, obviously, Italy, Spain, Norway, Canada. There was one recently signed. Japan is currently in talks at the moment. Poland's one, Turkey's one, obviously as members of the customs union. Sweden is one. There is one with Hong Kong. There isn't one with Australia. Oops. So there isn't one with Australia. There is one with South Africa, and there isn't one with India. So of those 20, granted I've ticked one which I shouldn't have done, of those 20, 16 of our top trading nations currently sit under a free trade agreement. So that is as barrier-free as we can see at the moment. So without impingement, our trading relationship is very, very good with these countries, and that's probably why they are the total, have the total trade figures that they do there. So Chris actually asked a very, very good question just now, talking about a hard Brexit, a cliff edge Brexit. Because if we have that, then the trading relationship that the UK therefore has with Europe, which obviously, as you can see from a lot of these are European nations and members of the European Union, would fall back onto rules afforded to us as members of the World Trade Organization. So this is, as I said, this is the default position. Now, a lot of people will talk about tariffs when we start to talk about trade.
Jeremy, an interesting question from Paul. Is the Netherlands trade figure inflated a little bit by oil? It says as it usually is.
Sorry, I couldn't quite make out the...
Is the trade figure for the Netherlands inflated unduly by oil?
The Netherlands there will be an oil figure in there as well, but likewise, so will the Norwegian figure. And the United States figure as well. So the Netherlands is obviously a huge trading nation, and a lot of that will be simple parts back and forth, on ferries between Ostend and Harwich and places like that. As far as actually finished deliverable goods, it would be a lot lower. But obviously, given their trading status as Schiphol is one of the busiest airports in the world. They've got more flagged freighters, I believe, than most countries out there in the world. So, hence why they are quite high. Yes.
Thanks.
No worries. So, going back to the WTO, what a lot of people will talk about when they talk about trade and the WTO is they'll talk about tariffs and additional fees that the UK consumer will therefore have to pay on goods. It changes from industry to industry, but one thing that we would have to do, and as much as some members of the Brexiteer community will say we can have no tariffs with anyone, that's absolutely right. But one thing that we would need to do is make sure that that is uniform across the world. You can't impose high tariffs on one country and have low tariffs on another country. Membership of the WTO means that you have to have blanket tariffs with every economy moving forward. So sector-specific agreements are not permitted. We can't do a deal with Germany to continue to import their cars. We can't do a deal with Italy to continue to have tariff-free Prosecco, for example. Looking at these tariffs that we are likely to see, Italian mozzarella cheese, 46%. Dutch tomatoes. Anytime you go to a supermarket, look at where your tomatoes come from. A lot of them will come from Holland, an extra 21% as a result of that. The most important thing about trade is not tariffs, however. Additional costs can be factored into a model. The most important thing is the customs union and membership, therefore, at the customs union. Now, this is quite an interesting graph that, and it comes from a news article that we found in the Financial Times, which shows the difference between waiting periods and what happens with traffic. So, down on the south, in the southeast of Kent, obviously, is Dover, the largest port here in the UK. If you remember back to 2015, we had the French dock workers strike, the French lorry driver strike, and we eventually actually had the Channel Tunnel closed as a result. But we were still members, and we are still members of the customs union now. There is no customs check between the UK and France, or anywhere else within the European Union. That blue line, and anyone who has lived in Kent or knows Kent or has travelled through Dover will know about Operation Stack, which is when the port's busy, lorries back up onto the M20, use that as a car park, and then eventually clear when things calm down in Dover. That blue circle represents how far back the traffic jam would be if an additional 2 minutes was put on processing time per lorry as a result of leaving the customs union. So that would take things back to about Ashford. An additional 4 minutes would take the traffic down back to Maidstone. 8 minutes would take you back to Dartford, and I think it's 12 minutes, 10 or 12 minutes per lorry, and you're looking at something in the M25 back towards Romford. That is stacked traffic. That is non-moving, eventually just waiting to be processed. Now, whatever that may be, if you're shipping computers or you're shipping something which is not just in time, as a lot of manufacturing and heavy manufacturing may be here in the UK, that may be okay. Food, for example, and obviously high-tech specialized goods for auto manufacturing here in the UK, for example, that really acts as a problem. We may see trade shift away from Dover. We may see a lot more airborne trade coming in and flying directly into where it needs to be done, but obviously that will negatively affect the economy around these areas. What that means for you, though, as a business who is selling goods abroad, maybe freighting goods between the European Union and the UK, is that there's going to be delays. Larger processing, that second point there, I think is probably the most important point on this slide. Large processing will take priority. Container ships will take priority over lorries, over HGVs, over vans. The larger stuff, the more expensive stuff, will have a customs processing site set up more or set up quicker than what we would tend to see elsewhere. So as it stands at the moment, and as I said at the beginning of this presentation, Brexit will live and die via trade, and it will live and die via trade and investment. And so far, we are not seeing the investment within the systems that need, the customs processing that needs to facilitate that international trade, for us to be confident that if we do leave in March 2019, then the trade picture is going to translate seamlessly, as some would have you believe. So that obviously gives you the question, kind of, what can you do about it? Now, the outlook for SMEs is very strong at the moment. We personally think, and certainly those who are dealing on marketplaces who are selling internationally. But as you well know, and as you probably will know, your margins are being put under pressure by higher inflation, and hopefully you're able to make up some of that via the devalued pounds and selling through export markets. But regardless of what is happening politically, there still needs to be an element of looking after your bottom line. So our 5 points, for international businesses at the moment, as a result of Brexit, as a result of all the volatility that we are seeing in the pound, is first off to use hedging tools to help mitigate that currency risk. Now that may be forwards, that may be what we call flexible forwards, which allow you to buy a certain amount of currency for a starting in the future, 6 months from now, and then you have to use it for 6 months after that. Currency strategies to suit your business. It depends obviously on the supplier relationships you have, the marketplaces with which you're selling on, the currencies within which that you are operating. But simply going to market whenever you need currency, or repatriating currency whenever you need something back here, it may work from a simplistic ease point of view, but it may not be the best way that your business can fully operate when dealing internationally. The one thing that we always say is as soon as your business crosses a border, it opens up an opportunity, but it also takes on a risk. And if you are cognizant of the opportunity, you also have to be cognizant of the risk as well. Sterling used to have fairly quiet Asian sessions. As soon as the UK down tools, the US picks up, but by about 9 o'clock in the evening, you could put a price in for sterling dollar. You would come back the next morning at 7 a.m. and sterling dollar would be roughly where it was kind of 10 hours ago. What we now see and what we now believe is that the Asian session, i.e. when Hong Kong and Singapore are trading and everyone here in the UK is in bed, that sterling will become increasingly volatile. Why? Because we expect a lot of parliamentary votes, a lot of parliamentary speaking, both in Brussels and here in the UK, to go long into the night. And if we see votes, if we see divisions within Westminster, which do have an impact on Brexit, then that's going to negatively affect sterling or positively affect sterling, but it's certainly going to make it volatile. And friends who do this job in Hong Kong and Singapore won't mind me saying, but they have a looser handle on Brexit and the impact of Brexit than we do obviously here in the UK. The liquidity of the market is a lot less there, so moves tend to be quite outsized. So if you're wanting to take profit on a move, if you're wanting to set a level that you know that you want, market orders in this kind of environment work very, very well. You're also, we also say make bulk payments to suppliers, or if you've got a global payroll, you can also do that as well. It simply reduces the costs. I'm speaking to you from our office in London, where we've got 450 staff, but we are a team of 650 globally, with offices in Sydney, in Singapore, in Hong Kong, and in the United States. So we're always on here at World First. So if you have any questions about what is going on and how it best affects your business, then 24 hours a day, there is someone here at World First to speak to. Regardless of what is happening here in the UK, global trade is actually up. The biggest risk to the world at the moment is not Brexit. As a Britisher, it's very, very easy to think that Brexit's the be-all and end-all. It's the most important thing in the world, but actually it's not. Donald Trump is probably the most important thing in the world, as much as that pains me to say it, but his relationship with China is a huge, huge risk for the global economy. As it stands at the moment, however, global trade is up 40% in the last 10 years. You would not have thought, with the global financial crisis that we had, that global trade would be up 40%. Another stat for you there: the average UK SME earns £300,000 a year overseas. Some of you will earn less than that. Some of you will earn a lot more than that overseas. But that is the average UK SME. But we expect that to pick up over the course of the next couple of years as a result of Brexit. But we have to do it right, and we have to do it properly. The challenges to the expansion of trade is that politics is driving market volatility. We know that. It's faster and it's cheaper to move boxes than it is to move money. And the current banking setup hampers global trade. For young businesses, hungry, agile businesses that want to be everywhere from anywhere, who simply want to be able to make sure that their business is always on, banking internationally almost, then the current banking setup, business banking setup in inverted commas, simply isn't good enough.
Yeah, Jeremy, I think a case in point there is we're hearing from a lot of retailers getting very excited about Amazon in Australia. I don't know if you'd like to say anything about Australian bank accounts at the moment, but a high interest at the moment for them.
Yes, I mean, as far as our product offering, the Australian banking model is very, very interesting.
Did you manage to look at the inside?
The Australian banking model is.
Did you take one? No. Yeah. I just had it on my desk though. I should do this.
Hello?
The colour was lovely. Colour's lovely.
So what I was trying to say was that the world account here at World First is something that we see as being the future of international banking, because it's almost instantly allows you to open bank accounts in country. You can hold balances in sterling, you can hold it in euro, you can hold it in the US dollar. You can, we've just also opened up our Canadian dollar ability as well. Sorry, can I just ask that we mute the other mics because it's quite noisy on the line? Thank you. Where was I? Yeah, sorry. So we've added the CAD availability as well. We've also added the Japanese yen to that as well. So you can hold balances within those currency and very, very seamlessly move money in between them. What it also allows you to do is have those bank accounts, so suppliers in that country, or obviously marketplaces from which you are selling goods, can deposit funds within that account. It's your account. We have no lien over it, and then you can transfer it whenever you want. This has only been going for a little while here in the UK, but certainly the feedback has been very, very strong. Customers who previously used to sell just in the UK, and then tried to move into Europe. One's now selling on Fancy.com, on Lazada, on Amazon.com in the US as a result, and able to streamline their sales and receive proceeds of sales in Asia, the US and Europe. Similarly, companies receiving USD proceeds from US marketplaces, they can repatriate some, they can send some to the rest of their suppliers in the United States, and likewise, if you're paying suppliers directly in Asia, even though your US account is based in the US, once again, it's still your account. You're able to send out the funds as and when you see fit. Now, in the grand scheme of things, a lot more currencies are due to come online as time moves on. But we really see this as something which will drive international trade and certainly help businesses who are doing so at the moment. You can control it all from the app on your phone, and this will just make things a little bit easier for businesses which have enough to think about given Brexit. So the outlook here in the UK is not something that we are overly pessimistic about. We see that there is a lot of ability for SMEs, marketplace sellers, whatever you want to call them, doing very, very well. But the tools have to be have to be put in place, and obviously government needs to make sure that they are providing some certainty to them as well. That concludes my presentation. Chris, if you have more questions, which I'm sure you do, then let's go through them.
Yes, thank you so much for this, Jeremy. One question, you spoke a bit about the effects on sterling and the fact that it's like having a Blue Cross sale whenever you're selling. You didn't touch on what may happen with interest rates. We've just seen the first rise in 10 years. Obviously, for anyone with a business mortgage or business loans, that's quite an important factor. Where do you think interest rates are likely to go in the short term?
I don't think. I mean, it's a very. I mean, this is the $64,000 question in currency at the moment. Is what now happens? They've kind of burst the bubble on interest rates. Do we run higher from here? To be honest, if you look at it in perspective, while it is the first rate hike that we've seen since 2007, the last time we hiked interest rates in the UK, no one had an iPhone because they hadn't been released yet. That's how long it was. But they've only taken interest rates back to where they were for the majority of the global financial crisis, up to kind of 0.5%. We don't see them running meaningfully higher over the course of 2018. There may be another rate rise. If it is going to happen, it's probably going to happen in August or September of next year. But I would be very, very surprised if rates got above 1%. They're currently at 0.5%. I'd be very surprised if rates got above 1% over the course of the next couple of years. There's a lot to be said about inflation here in the UK economy at the moment, and that's obviously why the Bank of England has raised interest rates, but that has mainly come from the fall in sterling. And that will wash out of the figures by the end of the year. The inflation picture should calm down and interest rates should stay where they are. So I don't think the move earlier this month was a mistake, but I think further rate hikes may be. So I think it stays as is.
Fantastic. And you showed a very interesting slide about the countries that the UK trades with, and I noticed it was Germany and the United States that we trade with most. You obviously also see marketplace traders who use your services for, say, repatriating euros to sterling or dollars to sterling. Which are the hot countries for marketplace sellers to be retailing to at the moment?
I would say that, I mean, the largest one is still Amazon US. It's still the US site of Amazon. I think that will always be. It's like the Beatles trying to break the States. It's every business's dream to really break Amazon.com as well. So that will always be the behemoth at the top end of the scale. Similarly, marketplaces in France, similarly marketplaces in Germany seem to be doing very well at the moment. What they are largely tied to is where it's not as a result of where sterling has fallen the most and therefore the most profitability is to be seen, but where there is where marketplaces do well because the language of the marketplace is internationally known. The logistics of that marketplace are very strong, and therefore the setup costs and the risk, in inverted commas, of setting up as a marketplace seller on that marketplace is very low. So, if you look at the top 10 as they stand at the moment, if there is a change, it's normally within that top 10 as opposed to a new incumbent coming along. And that's what we continue to foresee, and obviously we'll continue to provide for as well. Fantastic.
And you spoke about, you touched earlier on being able to fix currency rates. I think that's quite interesting for people importing who are maybe, say, importing from China, and it may be 6 months from placing the order to actually making payment and receiving the goods. What is the best tactic? Should you be fixing it the day you've placed the order? Should you fix it before you even get to placing the order? How does it actually work where you do an advanced currency exchange rate?
Obviously, it depends on business to business. It depends on how, your margins in particular. The one thing that we always say is that you got into the business, whatever you may be doing, you got into the business to do that and to grow a business by making profits, by providing that service or selling that good. You're not in the business of currency speculation. So if you're able to fix the price, in inverted commas, and protect your business as a result and protect your margins, most importantly, then if you're not doing that, you're gambling simply. And if you want to gamble, then fine. But if you don't, then there's absolutely no need to do so. As far as timing goes, as I said, it largely depends on how risk appropriate that company may think it is. Some will do 20%, 30% of the total order as soon as they start talking to the company, or as soon as they get the likelihood that they are going to be able to fulfill that contract. Some will do 50% as soon as the contracts are. Some will do 50% as soon as the contracts are signed, and the rest will do the rest as soon as it's on a within the logistics cycle, and therefore coming over to the UK. It also depends on your settlement times with your supplier. If it's a week or 2 weeks, then you may not think that it's worth that much. If it's 90 days, and with the volatility we're seeing at the moment, then it may be worth protecting it. So all of the guys you would speak to here at World First will obviously have a view on where they think sterling against the US dollar, or sterling against the euro, or dollar against the Chinese yuan is likely to move over the time period that you specify, and you can take a view moving forward from there.
Yeah, and I think that's a really interesting point you make, that you're in the business for selling products, not for gambling on currency exchanges. So it makes an awful lot of sense to have the peace of mind and actually know that the rate you've got is the rate you've got, and whether you effectively, hate to say win or lose, but whether the rate goes up or goes down, at least you know where you are with your cash flow.
Absolutely. I mean, I would say, the majority, if you're a marketplace seller, you're de facto working in retail, and retail margins, as everyone on this call will know, can be extremely razor thin. Now, currency moves, I'm just looking at my boards now. Today is a very quiet day. But even so, we're seeing some currencies have moved 1.2, 1.3, 0.6%. Now, that may not wipe out your entire profit margin, but it might wipe out 10% or 25% of that profit margin. And for someone who deals in this on a day-to-day basis, I've been doing this for 15 years or so, it mystifies me why you would gamble with something which, as you said, or as we've said, you've set up your business to make sure that you're able to profit from.
Fantastic. I think that's all the questions we've got, Jeremy. So I'd like to thank you so much for your time today and for your sharing your expertise. And for those who maybe have not used World First before, as a final goodbye, would you mind sharing where you can go to actually sign up for a World First account?
Yeah, absolutely. So the URL is simply www.worldfirst.com. World First is all one word. And then on the top of the page, you'll be able to see accounts for business, for online sellers, and you'll be able to register through there. You can also get in touch with me directly. I'm at jeremy.cook@worldfirst.com if you have any questions about anything that we've spoken about today. And I look forward to speaking to any and all of you in the near future. So and also thank you to Tamebay as well for allowing us to speak to you as well. Thanks,
Jeremy. For anyone that wants to review some of the slides again, we will be putting a link to the recording up on Tamebay in the very near future, so you'll be able to rewatch the entire presentation, and we'll also make sure it's emailed to you. So thanks everyone for your time today.
Thank you.